What if the bank branch you pass on your way to work is already an antique? And what if the future of banking isn't a bank at all? Instead, it's your favorite shopping app, your social media feed, or even your car. This isn't some sci fi prediction for 2050. It's happening right now. And over the next few minutes, I'm going to show you how this quiet technological revolution is making traditional banks fade into the background. Think about the last time you ordered a cab, paid for food delivery, or sent money to a friend. Did you open your clunky banking app? Probably not. You just tapped a button inside another app. That's the silent revolution in action. It's called embedded finance, and it's the invisible layer of financial technology that is completely changing our relationship with money. The lines between banks, apps, and tech companies are blurring. And in this new world, almost any app can become a bank. We are witnessing a massive structural shift in financial services. Banking is no longer a place you go, but something you do, seamlessly integrated into your digital life. This isn't just about making things easier, it's a deep, systemic change. The financial system of the future won't be built inside the marble halls of old school banks. It'll be coded into the apps and platforms you already use every single day. In this video, we'll unpack this monumental change. First, we'll look at the deep seated problems with the old banking model, the frustrations we've all been trained to accept as normal. Then, we'll get to the solution that's making it obsolete: embedded finance. We'll explore how it works, see it in action with real world examples, and uncover its ultimate form: the all powerful super app. Finally, we'll explore what this all means for you, for businesses, and for the very future of money itself. The era of the standalone bank is winding down, and a new battle for your loyalty, your data, and your wallet is just getting started. Let's be honest. For most of us, dealing with a traditional bank feels like a trip back in time. The whole experience is a masterclass in friction, delays, and processes that feel totally out of place in our on demand world. We've been conditioned to accept it, but when you really stop and think about it, the model is fundamentally broken. Remember applying for a loan? You probably had to collect a mountain of paperwork: pay stubs, tax returns, bank statements, and then either wrestle with a clunky online portal or, even worse, book an appointment to go sit in a branch. The process is slow, opaque, and often leaves you waiting for weeks just to get a yes or no. It's a system built for the bank's convenience, not yours. And this frustration goes way beyond lending. Think about opening an account, setting up an international payment, or just trying to dispute a charge. It often involves long hold times on the phone, getting transferred between departments, and repeating the same information over and over again. According to a 2023 Zendesk report, 70% of customers expect anyone they talk to at a company to have the full context of their situation, yet banking often feels like starting from scratch with every interaction. This is a world away from the one-click simplicity we expect from companies like Amazon, Netflix, and Uber. The physical branch, once the heart of banking, now feels more like a relic. In an era where 72% of US adults use mobile banking apps, the need to physically go somewhere for routine tasks seems absurd. Banks have been notoriously slow to modernize, often just slapping a digital coat of paint on top of decades-old legacy systems. This leads to a disjointed mess where the mobile app, the website, and the branch feel like they belong to three different companies. And then there are the fees: monthly maintenance fees, overdraft fees, wire transfer fees. Traditional banks have often built a business model that profits from customer mistakes or necessities, a holdover from an era when you had few other choices. The root of the problem is this: traditional banking is a destination. It's a separate, isolated island in our lives that we have to consciously visit, whether physically or digitally. You need a loan for a home renovation, so you go to the bank. You need to pay a supplier, so you log into your bank's portal. Each financial task requires a separate journey with its own set of hurdles. This model is broken because it doesn't match how we live today. We expect services to come to us, to be available at the point of need. Today's consumers want banking to work quickly, intuitively, and on their terms. They aren't comparing their bank to other banks anymore. They're comparing it to the best, fastest, and simplest experience they've had with any company. And by that standard, traditional banking is failing. These problems aren't just minor annoyances. They have real costs. The friction in banking isn't just frustrating, it's expensive. It wastes our most valuable resources: our time, our money, and our opportunities. Let's talk time. The hours spent gathering mortgage documents, waiting on hold with customer service, or driving to a branch to sign one piece of paper, that's time you're not spending with your family or growing your business. For small and medium-sized businesses, this lost time is critical. When a business has to wait weeks for a working capital loan, it can mean missing out on a vital inventory purchase or a chance to expand. The traditional system is a bottleneck. Now, consider the financial cost. It's not just the obvious fees. When an international payment gets delayed, a supplier might halt a shipment, costing a company thousands in lost revenue. For individuals, the slow, rigid nature of banking can be just as punishing. Being unable to get a small short term loan quickly from a bank might force someone toward predatory lenders with sky high interest rates. But maybe the biggest cost is the loss of opportunity. The traditional banking model can be incredibly exclusionary. Its reliance on old school credit scoring often leaves behind people with non traditional income, thin credit files, or those new to the country. These are often credit-worthy people who are simply invisible to a system that hasn't evolved. This doesn't just hurt individuals, it stifles economic growth. At its core, the frustration comes from a feeling of powerlessness. The traditional banking system often feels like an archaic institution we're forced to deal with, a gatekeeper that plays by its own rules. It's 1970s technology in a 2025 world. The experience is impersonal and completely disconnected from the digital reality we all live in. We get hyper personalization everywhere else, from the movies Netflix recommends to the products Amazon suggests, yet banking remains stubbornly one size fits all. A 2023 report noted that over 60% of customers think personalized recommendations are better than generic ones, but banks have been slow to catch on. This disconnect has created a huge vacuum and a growing demand for something better. People aren't just ready for a change, they're actively seeking it. Why should applying for a loan be harder than booking a flight? Why is sending money across the world slower than streaming a movie? These questions expose the deep cracks in the foundation of traditional banking and have set the stage for a revolution. After decades of frustration, the solution is finally here. And it's not a better bank, it's the elimination of the bank as a destination. The solution is embedded finance. At its core, embedded finance is the integration of financial services like payments, lending, and insurance directly into non financial apps and platforms. Put simply, it's finance that meets you where you are. Instead of going to your banking app to make a payment, the payment is built right into the merchant's app. Think of Uber, where your payment happens automatically in the background, or Shopify, where a small business can get a working capital loan from its store dashboard without ever talking to a bank. That's embedded finance. This isn't just a buzzword, it's a complete restructuring of how financial services are delivered. The global embedded finance market is exploding, with some analysts projecting it could be worth over $7 trillion by 2030. This growth is happening because embedded finance fixes the core problems of traditional banking, friction, and inconvenience. So, how does it work? The magic behind it is a technology called banking as a service, or BaaS. BaaS is a model where licensed banks essentially rent out their regulated infrastructure to other companies through APIs, application programming interfaces. An API is like a secure messenger that lets two different software systems talk to each other. Think of it this way: a bank has the license and the core systems for moving money and making loans. A non financial company, like a retail brand, has the customers and a great user interface. Through BaaS, the retail brand uses the bank's APIs to offer its own branded financial products. The customer gets a seamless experience, the brand creates a new revenue stream, and the bank expands its reach without building a new app. This is what some call co-opetition, a mix of cooperation and competition where banks and tech companies work together. Let's look at some examples you probably use every day. The most common form is embedded payments. When you save your credit card in your Amazon account for one-click checkout, or when your Starbucks app automatically reloads your balance, you're using embedded payments. The transaction is so woven into the experience that you barely notice it. Then there's the real powerhouse, embedded lending. This is where the disruption gets serious. The most popular example is buy now, pay later, BNPL. When you're buying a new laptop and see an option from a service like Klarna or Affirm to split the payment into 4 installments, that's embedded lending. These services are booming because they offer instant, transparent financing right at the moment of purchase. But this is expanding far beyond retail into healthcare, travel, and even B2B, where businesses now expect the same seamless financing they get as consumers. Embedded insurance is another fast-growing area. When you book a flight and are offered travel insurance at checkout, or when Tesla integrates insurance options right into the car buying process, that's embedded insurance. It's contextual and convenient. Finally, we have embedded banking. Companies like Shopify now offer their merchants Shopify Balance, a business account with a card and rewards, letting them manage their money without ever touching a traditional bank. What makes this so powerful is the use of data and AI. Embedded finance platforms don't just use traditional credit scores, they leverage alternative data, like a business's sales history or a driver's earnings, to make faster, more accurate decisions. AI can analyze this data in real time to assess risk and offer personalized terms, making financing more inclusive for people and businesses overlooked by old models. In short, embedded finance is turning every company into a fintech company. It's dismantling the old banking monopoly by breaking down financial services into components that can be integrated anywhere. The question is no longer who is my bank, but where does my banking happen? And the answer, increasingly, is everywhere. If embedded finance is weaving individual financial threads into our apps, the super app is the fully tailored garment. It's the ultimate evolution of this trend, an all in one platform that consolidates a huge range of services, both financial and non financial, into a single ecosystem. A super app is like a digital Swiss Army knife for your daily life. Imagine one app where you can chat with friends, order groceries, hail a ride, pay your bills, invest in stocks, and get a loan, all without ever leaving its interface. That's a super app. This phenomenon has already completely transformed Asia and gives us a clear window into our own financial future. The most famous examples are China's WeChat and Alipay. WeChat started as a simple messaging app. Today, it's an indispensable tool for over a billion users in China. It has social media, a dominant payment system called WeChat Pay, and a universe of over a million mini programs, lightweight apps that run inside WeChat itself. You can use it to do everything from ordering food to paying taxes, all funded by your integrated WeChat wallet. Likewise, Alipay started as a payment tool for the e-commerce giant Alibaba. It has since evolved into a financial super app offering payments, wealth management, insurance, credit scoring, and countless lifestyle services. Their strategy was brilliant. They started with a high frequency service, messaging for WeChat, e-commerce for Alipay, to build a massive user base. Then they layered on more services, with the integrated payment system at the center. This not only created new revenue, but also gave them an incredibly rich stream of data to offer hyper-personalized services. This model isn't just in China. In Southeast Asia, Grab went from a ride hailing app to a super app offering food delivery, payments, and lending. In India, Paytm grew from a mobile payment platform into a financial hub for over 400 million users. And in Kazakhstan, a bank called Kaspi successfully turned itself into a super app, merging banking with a huge e commerce marketplace. So, what about the US and Europe? The market here is more fragmented, but the race is on. PayPal is a prime contender, expanding beyond payments to include crypto, savings accounts, and BNPL services. Fintechs like Revolut are also in the running, bundling currency exchange, stock trading, and budgeting tools into one app. Even tech giants like Apple, with its tightly integrated hardware and software, are laying the groundwork with the Apple Card and Apple Pay. The super app is the peak of embedded finance because it achieves the ultimate goal, becoming an indispensable part of your daily routine. By offering total convenience, it creates incredible customer stickiness. Why use 10 different apps when you can use one? This creates a powerful cycle. More users attract more services, which makes the app more valuable and attracts even more users. For traditional banks, this is an existential threat. These ecosystems are designed to own the customer's attention, data, and transactions. In this world, banks risk being demoted to a utility, the invisible plumbing that provides the regulated infrastructure, while the super app owns the valuable customer relationship. The battle for the future of finance isn't just about who has the best features, it's an ecosystem war. This shift toward embedded finance and super apps isn't just a tech trend, it's a fundamental restructuring of the financial industry with huge implications for everyone. First, what about the traditional banks? Does this mean they're all going extinct? Yes and no. The idea of a bank as a standalone, customer-facing brand is certainly on the ropes, but this doesn't mean all banks will disappear. Instead, it's a chance to evolve. The old banks versus fintech narrative is outdated. Smart banks are realizing that if you can't beat them, you should power them. They're embracing banking as a service, BaaS, shifting from being the direct provider to the essential infrastructure partner. Think of Goldman Sachs partnering with Apple or NatWest partnering with Vodafone. By providing their regulated services via APIs, banks can tap into new markets and generate revenue without needing to win the customer-facing battle. For the banks that cling to their old models and fail to adapt, however, the future is bleak. They risk becoming irrelevant. For consumers, this revolution is overwhelmingly positive. It kicks off an era of incredible convenience, personalization, and access. The main benefit is the removal of friction. Financial services just happen in the background. You get financing at the point of purchase or insurance when you book a trip. As one report found, 72% of customers want immediate service, and embedded finance delivers exactly that. Beyond convenience, this drives hyper-personalization. By leveraging data, these platforms can offer you tailored financial products and advice, not a generic credit card offer. This is powered by AI, which can analyze user behavior to provide customized offers that build real loyalty. Perhaps most importantly, this is a massive engine for financial inclusion. By using alternative data sources, embedded lending can extend credit to millions of people and small businesses who were previously shut out of the traditional system. It's a democratization of finance. Finally, what about non financial businesses? For them, embedded finance is a game changer. It unlocks entirely new revenue streams, allowing a retailer to earn a commission on loans or a software platform to profit from payment processing. This can be substantial, with some analyses suggesting embedded finance can dramatically increase customer lifetime value. It also enhances customer loyalty. By offering an all in one experience, businesses keep customers in their ecosystem, which is especially powerful in the B2B world, where it streamlines operations and improves cash flow. In summary, this revolution is redrawing the financial map. It's shifting power from siloed institutions to integrated platforms. For banks, the choice is simple: adapt or become a relic. For the rest of us, it's the beginning of a more convenient, personalized, and inclusive financial future. Looking toward the end of this decade, the trends we see today will accelerate, creating a financial landscape almost unrecognizable from the one we grew up with. By 2030, the idea of going to the bank will sound completely ancient. Banking will be like electricity: always on, essential, and totally invisible, powering our lives in the background. The engine of this next phase will be artificial intelligence. AI is moving way beyond just chatbots. It will become the core intelligence layer for all financial services. AI-driven personalization will reach a level of sophistication we can barely imagine. Your financial apps will act as true personal finance managers, anticipating your needs. Based on your spending, your calendar, and your goals, your super app might proactively offer a savings plan for a vacation, suggest a micro investment, or pre-approve a line of credit when it sees you're shopping for something big. Credit decisions will take seconds, not weeks, using a vast array of data to create a fairer assessment of risk. The very devices we use will become financial platforms. Your smart car could automatically pay for parking and tolls, maybe even offering usage-based insurance that adjusts in real time. Your smart fridge could reorder and pay for groceries from a set budget. Banking will be embedded not just in apps, but in the world around us. For businesses, B2B embedded finance will just be the default way of operating. All the necessary financial tools for a small business will be available directly through the platforms they use to run their operations, no traditional bank required. However, this future isn't without its challenges. The biggest hurdles will be regulation and data privacy. As finance becomes more deeply embedded and AI makes more autonomous decisions, regulators will intensify their focus on consumer protection and data security. The debate over who owns and controls our data will become even more critical when a single app has a 360-degree view of our entire life. By 2030, the financial ecosystem will be a complex web of collaboration. The traditional banks that survive will be the regulated infrastructure providers, the Intel inside of the financial world. Fintechs will continue to be the masters of user experience. And at the center will be the platforms and super apps that own the customer relationship. The end game is the age of invisible finance. The best financial experiences won't feel like banking at all. They will be so seamless and contextually aware that we won't even have to think about them. The war for your wallet will be won not by the institution with the most branches, but by the ecosystem you can't imagine living without. This revolution is happening faster than anyone predicted, and it's going to affect every one of us. We are moving from a world where banks held all the power to one where finance is being woven into the technology we use every day. But what do you think? Is the end of traditional banking a good thing? Are you excited about the convenience of super apps? Or are you worried about data privacy and the power these platforms will have? Let me know your thoughts in the comments below. I'd be really interested to hear which app you wish had financial services built right into it. And if you want to stay ahead of the curve on the tech shifts that are reshaping our world, make sure you subscribe and hit that notification bell. We break down topics like this every week to help you understand the future before it arrives. So, are we really seeing the end of banks as we know them? The role they play is definitely changing forever. The bank as a physical destination, as a clunky standalone app, as the sole gatekeeper to our financial lives, that version of the bank is already fading. We've talked about the deep-seated frustrations of a banking system built for a different time, a system defined by friction and a total disconnect from our digital world. We've seen how the elegant solution of embedded finance is dismantling that old model, moving financial services out of their silos and weaving them directly into the platforms where we live and work. This isn't a minor upgrade, it's a paradigm shift. Powered by banking as a service and accelerated by AI, this revolution is making finance more convenient, personal, and inclusive. Its ultimate form, the super app, gives us a glimpse of a future where one ecosystem can manage nearly every aspect of our daily lives. The battle for your wallet is no longer being fought between banks. It's an ecosystem war where the real prize isn't just processing transactions, but owning the entire customer relationship. And while this brings incredible convenience, it also raises critical questions about data, competition, and power that we need to keep asking. The financial system of the future isn't being built in stone and marble. It's being written in code and embedded everywhere. The transformation is quiet but total. And while the bank branch on the corner might still be standing for a few more years, its relevance is shrinking every day. The future of finance is here, and it doesn't look much like a bank at all.